Okay, hi there traders and welcome to Trade the Structure and the morning wrap or the morning jumpstart. US market wrap, so we'll take a look at what happened overnight in the US markets, in the European markets, and before that in the Asian markets. So sorry I didn't get it out to you yesterday, the morning jumpstart out to you yesterday. Actually, I had a few computer technical issues and everything went sort of south, so I just decided to leave that. And it's unfortunate because there's some really good levels to work off, especially off the currencies. We'll show you probably some of that later on, what we're looking at. They worked out quite well. Gaps everywhere on the morning because of what happened over the weekend, but it's pretty much brushed aside in the US markets. So being the end of month, you get that argy-bargy. People sort of tighten up their books, I guess. A lot of funds don't want to see the market down too low because obviously there's a lot tied, a lot of performance tied into those funds. So bit of window dressing from overnight. It looked like the US held up really well. Okay, considering what Asian markets, this is the SPY, what the Asian markets did on the open, got sold down pretty hard, and then pretty much spent all the rest of the Asian session and then European session ramping straight back up to where it started. So yeah, they did quite well to contain it and really salvage some of that sell-off. Now salvage some of the gains at least from the last few sessions. So let's get into it now. We'll start off. We'll look at the Australian markets and the Asian markets, and then we get over to Europe, US, and so on. So this is the what do we got here? The SPY 200. So we'll just take a look at that. We'll skip over the ASX 200. You can see that was a gap down. So it got really ramped up, and that was nothing more than just a ramp coming into the weekend, ramping it as high as they can. Took a bit of a hit over the weekend, but they managed to bring it all the way back, and you can see that they've rallied. That was the close of the ASX session on yesterday, and then the market basically ramped up since there through European session, and this was somewhere around about mid start to mid US session here. They hit the highs, pretty much making back all this losses, okay, from the day session. Ramped straight back up, then faded into the close, had a bit of a pop just in the close. As there's a few people, really that action there is just people squaring up, intraday traders squaring up pretty much overnight or from the day session. So you can see there's some support there at 70.25, and then you've got a little resistance zone at 70.55. Looks a bit different on the ASX. I've got a few different levels, but same sort of action there. What we could be seeing is whether it's going to ramp up here. I don't expect a big move up, considering what's happening over in Ukraine and what's happening over there. There's still a lot of fear, inflationary fear. Crude oil is ramping higher. I can't see inflation all of a sudden not being a problem. It is still a major problem, and it's getting worse with with the fuel input costs really starting to ramp up. So that should weigh on the market, in my opinion, considering we're still talking about rate rises in the US and inflation is not going away because the markets are sold off. It's still there. Okay, so that for me should sort of cap any movement to the upside. I'm sort of looking for don't mind seeing a flush higher and then some lower highs to work into and see if we can grind our way back down to 70.25. Even break straight off the bat, we may break that, retest it, and fail. Okay, and sort of make up for yesterday's negativity. Well, positivity, you'd probably say. Over to, we've got the Hang Seng. Now, Hang Seng was a bit more contained. You can see this is where it closed at 6 a.m. and then you've got the action after from the US. So it was pretty much contained between the day's highs. That's where it's opened and pretty much sold off after that. Come all the way back there, retested at 22,840 and then faded. So we got a little inside bid zone at 22,620, which held up okay. So that could come under fire today. So they're really the two key levels I'm working off. If we start to flush up, there's no reason why we can't gap fill and make back all that, which is a good chance that the Hang Seng will do that. If there's any negativity coming into the Asian session, coming to the Hang Seng Open, Hang Seng could probably rally, and vice versa. Any positivity from the Nikkei and the ASX market, Hang Seng tends to go the opposite way, just to squeeze out any traders. So it could be a matter of a pop-up, retest, and then we flush all the way up to 23,135. Now that may seem like a lot, but 100 to 200 points is not a lot on the open for the Hang Seng. Japan. They were pretty much the reverse. That was a gap down in the open. So it was really weak open. We see that across the board. Oil gapped up, gold gapped up, all your safe havens gapped up. Anything that's not a safe haven gapped down. Yet it was just completely brushed aside during the European and US sessions. So that was a gap down, retested into this level, 26,265, and then ramped all the way back up to close that gap. Now, I'm not really looking for, I want to see the open because I want to see what's going to happen. This level could hold up, 26,735. It could hold up. and you may get a lower high into it, or it may just flush it, chop around there, and it could be a choppy market. That's what I'm trying to avoid. I want to see some clear levels to work off with some clear lower highs and clear higher lows, for my buys and sells. All right, so for now, it's just really, you can see it flushed down to that level and retest it and held 26,535. So there's sort of the two levels I'll be working off today. The Dow overnight, you can see they did their best to stop that from failing. Pretty much that's what it was. You can see that gap down, so big ramp up on Friday night for really against the trend that was. So I mean, the market was negative, yet not the market was negative. The action, everything around there, they've got every reason to sell off, and it didn't. It got ramped up on Friday, and it managed to stand its ground, okay, at 33,490. So they were desperate to keep that level holding, okay, and they held that level and really kept flushing it up, kept spiking up, and you can see into the close. Anyone that's shorted into here, you sort of last move shorted it down here, got squeezed out into the open. You don't want to hold that short because you just never know what was going to happen in the overnight session for the US or in the Asian market session. Okay, so really that action there is very choppy. It didn't lead to too many trades, I would expect. You'd be trading the edges, meaning you'd be trading off that bid zone there, which was the support. Trading off there, you could be trading off, and any sort of spike which starts to fail, you'd be quick to try to sell into that or take some profits from many longs. So it was really just a choppy session with no real direction. Considering what happened over the weekend, considering Putin is threatening nuclear action, is all that sort of stuff, to me, is very negative. Every reason to sell off didn't happen. So it's really just that end of month argy-bargy or end of month window dressing for a lot of these funds. You look at the US tech, held up, another ramp up into the close. You can see, but it's held below that 14,320. So the trend is still down. The bias is down. The momentum is still down. It's just we've had a big recovery, and that plays in the hands of the end of month buying. Okay, so whether this here we start to see it roll over again, I think, with all the sanctions that are put onto Russia, they're not going to take that too friendly, which I would expect there's going to be a lot more negativity. Now, with oil spiking up, surely you would expect inflation to come to the fore again, because we've got inflation is not going down like the Fed was adamant it was going to do. It's going up. Okay, it's increasing, so they have to raise rates, which means there could be, with the state of oil at the moment and other inputs, I guess, for inflation at the moment, it could be that inflation is going to get more out of hand, so we could be looking down the barrel of another rate rise, which would weigh on the market even more. Okay, so maybe from this sell-off that we've seen over the last week or so, it could be a lot of it factored in already, but we'll wait and see. I think a lot of this end of month window dressing, we're going to see what's happening obviously tonight in the US and potentially the next couple of sessions, and see if we start to do head south again. But the first level I'll be looking at is really just this little inside level. What's that? That's around that, say, 14,000. It starts to break down there, you'll be looking for lower highs to sell into. Okay, let's look at Europe. Now, Europe, a bit of a mess. It opened weak. I don't know what this was. I think it's just bad data tick. But it opened here. That was the Asian session. When we opened about here. So it opened weak. That was a gap down on the index. And then basically that was a low. We saw the low from the open, just after the open, and it rallied up all the way back up again to sort of close that gap on the DAX. Now, obviously, like the US, everything faded from those highs. Come back in, is finding its support somewhere around, this is a big zone through here at 14,160, but this is a little minor support, which you can probably see. It's just in here, okay, at 14,200. Now, if that breaks, I would expect a lot of these buys to get squeezed out. We could get a bit of a flush down. Okay, that's what I'll be looking for. UK, which is the FTSE, held up nicely. I don't know what this is. I think this is just a bad tick as well. Some bad data feed at that stage. Probably everything was running rampant on the open yesterday. So you've got 73.60. You can see that support held 1, 2, 3, 4, 5 times, maybe 6 times. That level held quite nicely. So it was getting held up the whole day. And then Europe and US sessions held up quite nicely. Again, is that window dressing? I don't know, but I don't feel that with the negativity hanging around the markets at the moment that people are going to be wanting to buy it off that support. I don't understand why they would, because that could easily break and go slamming straight back down again. So I think if there's anything buying there, it was more from shorts, short covering. But someone's definitely defending that level at 73.60. So whether we start to head up, I don't think we will. I would more expect sort of a lower high to work its way down through 73.60, maybe a flush into 73.06 and so on. Okay, that's what I'll be looking for on the European markets tonight. Currencies. So the US dollar pretty much inverse. So I was looking at this as holding this level. If I thought we get any sort of high low after this gap down, you've got this gap down into that zone at 71.80. I drew it up yesterday. I obviously didn't get the chance to show you, but looking for that high low, which worked out quite nicely. Okay, you got this level spike down, had another go, tested into lows. You've got essentially an RTF, we call it retest fail, and we start to hold. Okay, once you get that RTF in a nice zone at 71.80 zone, then you're looking for a high low and a big squeeze. You're looking for pretty much a gap fill. It went past that, went beyond that, basically because the US dollar did the reverse. US dollar popped up into resistance and then faded all session right through Europe. So that safe haven bid from the initial open into the US dollar was pretty much given straight back to the market plus a bit extra. Okay, so that's why you can see this Aussie dollar just ramp straight back up. Nothing really I would expect to do with the Aussie side. Yeah, we're talking about potential interest rates rises as inflation gets a bit more out of hand in the Australian markets. And we've spoken about that before with the RBA saying we're not getting rates until 2024, a rate rise. And all of a sudden they flipped completely, did a about face and then turn around and saying, oh, we could be getting some this year. I think analysts are talking about this year. We're going to get rate rises from the RBA. So that's why you're probably easy enough to get some support into the Aussie dollar, especially if the US dollar is heading south. Okay, Euro, that's a bit strange. Just some gap down. Everyone's sort of expecting gap down. We've got into that support. This is what we're looking for yesterday. That test back into the lows, pretty much held up ideal. Look at that. I mean, you've got a nice little high low, pretty much right where we drew it. So it turned out really nicely. You've got, and that was only because you're sort of looking for that gap fill. You always get that overreaction from retail. And then because it's in the Asian market session, the key markets for currencies are basically Europe. You open to Europe and open to US, not so much the Asian market session, okay, especially for the US dollar based and euro and things. So that's why when you get a gap down like that, you kind of, to sell down here into a support zone after a gap is a very, very low probability setup. Now, if it pays out, it's not going to pay out that much, I would expect either. Because I would expect if you do get some sort of sell in here, you're only going to flush so far as that support zone. Okay, so it held up quite nicely, ramped up, haven't gap filled yet, but it's still holding high low. So if anything, you might just be going forward from a trade it today, going, biases up, try to stick with that. But don't forget, this move up is getting a bit extended. The US dollar move down is getting a bit extended. It may still, chop up, flush up, but whether it continues on all the way back up to, that support zone, if I can show you, at 1280, that resistance zone at 1280 is a different story. Okay, pound, big, massive flush down. Now, don't forget they've raised rates. Still talking up rate rises, which I would suggest provide support for the currency, for the pound at least. And if US dollar heads down, we're going to continue to grind up. So this is the action. Much like the other two currencies we're looking at, the action we're looking for a gap down. Pretty much, I want to see it pop back up there or retest it and hold a high low, which it did that. It did that, perfectly. And then you've got some buying opportunities just for that gap fill kind of a trade. Now, obviously, you've got one eye on the US dollar. If the US dollar is not going down, then you'd be any sort of longs into this might have been a bit tough. They would have been a bit choppy, and you'd be just looking to make sure you got tight risk. If the US dollar, it did pop up, fade a bit, and start to rally again. Okay, so you're trying to keep an eye on that US dollar as well, especially at the moment because that's a safe haven bid now. The fact that it didn't work, the US dollar just kept selling off. Any safe haven from the open was completely brushed aside. Set you up for a nice little run up in the pound. Now, US yen, again, that's your safe haven bids, I guess, in the yen backing off. US dollar, selling into US dollar as well. So it's sort of pressing that market lower, pressing that currency lower. And this was over here from roughly, it was the start of the US session when the US dollar was heading south. No safe haven buying, bang, market heads down. Okay, US dollar getting sold down. And then this was probably, about the start of the Asian market session. You can see it was ramping up into that resistance zone here at 115.64. But the fact that it couldn't hold, you've got to start to look at some lower highs coming to play because you've got some juice from longs, some more longs all built up. Sort of expecting the market to go high. You're getting some definite selling. You've got 1, 2, 3, 4, 5, or even 6 times in the end. By the time there, you've got this little spike and rejection into that zone as well. So then you'll be looking for a lower high because you're looking for some longs to get squeezed. Okay, gold, try and pump through the rest of it. Gold, safe haven buying. It was pretty much saw the open. The gap up was the highs, and that was it. It was just a choppy session after that. So I'm not keen on trading gold really. I think if it can't get a safe haven bid and ramp up, then I don't think you forget about it at the moment, because I think inflation is going to see the US dollar higher, and that's going to pressure gold. Okay, that's my view anyway. As a hedge, inflation hedge, it hasn't proven that just yet. This is not inflationary hedge. None of the fact that we're up at 1920 is more a safe haven bid. Okay, it has had a bit of a ramp up there, but I would expect this level needs to hold. It needs to prove itself 1886, 1876, and we need to get a key sort of a break up, retest, and then see if we can get something off 1910. Okay, but we'll keep an eye on that one. Oil, big gap up in the open and pretty much consolidated up there. It held sort of those gains, but you can see it was getting sold into. Okay, I'm not sure how the sanctions are going to work with Russia and oil, but yeah, there's going to be sanctions on there, which is going to pressure supply into our markets at least. Maybe Iran and all that still got supply there. All these countries might stick together, and Russia, it's going to go somewhere, but it won't be going into our market. Okay, so really, we could be looking at higher prices as opposed to say some of the, I guess some of those countries there like Russia. But I would expect, the dynamics are really, it's going to be more bullish than anything until things maybe settle down. I know there was talks between Ukraine and Russia. they ceasefire where Ukraine ceasefire and Russia just went and bombed someone, took the opportunity to go and bomb someone, I think, last night. So I don't think there's going to be a ceasefire just yet. I don't think Russia got what they want, or they haven't achieved what they wanted to yet. And whether they see these sanctions as, let's brush them aside, or they're already a struggling economy, I think, well, from what I've read anyway, have been struggling for a few years. And now any sanctions are going to really crimp it a lot more. Okay, so it's just whether or not they want to do something because of the economics of it all, or whether Putin just is ego is going to keep driving this invasion forward. But either way, oil, you would expect it to get supported. Any sort of dips to get supported, anything into 93.87 gets supported. Okay, so but for now, that's just a gap up move. It's gapped up. You wouldn't be buying on that gap up. You're mad to be buying on the gap up like that. You could be buying intraday. You might have bought it in here, but you've got to be quick with your risk. Okay, quick to get out. So for me, really, if this could just continue to grind its way down to 93.87 for now, that's what I'm expecting. Copper took a bit of a hit into the close. We've been talking about this level for a while. It's been this zone in here. It's flushed into that zone. It's held up off that zone for quite a few times. We're coming off lower highs as well, and also this level up here, 166. Okay, that level's holding. That resistance zone is holding. So that after a big jam higher, and then it's come back down again. Okay, if you're bullish, it needed to get up through there. Now it's failed 1, 2, maybe 3 times. It's failed at that level. So if you're bullish, you're getting squeezed out. Anyone here could have already maybe been squeezed out. If you're holding and you're trying to build a position off that, you're working against a major resistance zone. So I'm more inclined to think after seeing this lower high come into play that we're going to head down through that level, maybe test into 97.13. That's just what I'm looking for at the moment. Now, Bitcoin and Ethereum, start of the US session just ramped up. To me, that's out of the blue. Okay, so we're coming off this level here at 38,850, coming off the gap down, sort of grinding out. That was a grind. So normally a grind up into a zone after a gap down, it leads to another sell-off. Okay, but instead it just turned and went straight back up again. So there's still some believers around with Bitcoin, and some hardcore bulls, and with your cryptos at least. And we're looking at that. And basically, like I said, out of the blue at 1 o'clock, coming to that US session open. So US is Sydney times from 12:30 to 1:30 is that sort of pre-market. Then 1:30 the underlying indices open on the NYSE, and that was that ramp up there. So it just ramped straight up, no pullback. So really, I'm not looking to buy here at all. I want to see some sort of that to me is not a pullback. That's not a pullback on the 30-minute chart. I want a deeper correction to flush out some of these longs. Now, if we correct from here back below this level, I'm looking for some lower highs to potential hold. If we correct, you get high enough and then you correct into the level and we start to do this, then you're looking for some buys. But you need to see, after some sort of extension like that, you really do need to see a pullback to flush out some of those longs. And the same really from Ethereum as well. It's into a resistance zone. It's just open up here. Asian market's going to open. You're going to get a bit more buys. Look at this go. Okay, we're all back on. Crypto's the thing again. Okay, let's ramp it up, and then they could just get sold into. So, like I said, I'm not looking to buy or sell just yet. I want to see either this action fade back below the level and you get lower high to form, or you get this level starting to hold, any retest, and then a higher low. All right, that's it for me, guys. Thank you very much for joining me. I hope you enjoyed that. Now, if you can, much appreciated if you leave us a like on the YouTube channel. If you don't know any details, just email me to tradethestructure@gmail.com, and I'll get straight back to you. All right, guys, enjoy the day, stay safe, and we'll speak to you again tomorrow.